Hi everybody, this is Lara with an update for dollar yen analysis. Last time Jordan Marshall updated this, but he's back in school, so I'll be updating this for you. The quarterly chart for dollar yen is bearish. This is the alternate. It expects that a supercycle degree first wave is incomplete with cycle 3 and 4 over here, now moving down in the early stages of cycle 5. A target 9.0019 would be where cycle 5 reaches 0.618, the length of cycle 3. Cycle 4, if it continues, may not move into wave 1 price territory, which is off to the left of the chart at 254.50. But this is the main quarterly chart, and it sees supercycle wave 1 over at the last low. This has a really good fit. We've got cycle 1 off to the left of the chart. Here's 2. Beautiful looking impulse for 3. Regular barrier triangle for 4. The BD trend line looks essentially flat. This is a really nice looking barrier triangle, and the final fifth wave over here for supercycle wave 1. And if wave 1 is over there, then wave 2 should be underway, and it may be unfolding as a combination or a flat. Wave A or W may be over as a zigzag, and now wave B or X may move lower. If cycle 2 or supercycle 2 unfolds as a flat, then B must retrace a minimum 90% the length of A at 83.245. Before I go any further, I just want to remind you that we are analysing the euro dollar every day, 5 days a week at Pure Elliott Wave. This is our chart from the 25th of August. Now, if you're trading euro dollar, you know that today price is a lot lower and we are completing a bearish, very bearish candlestick pattern today on the 31st of August. If you had had this chart when this was our main wave count on the 25th of August, how much more money could you have made on the way down? Have you been trading euro dollar in the wrong direction? How much could this have saved you? So if you subscribe to our Eurodollar analysis 5 times a week, you'll get a report with fully annotated charts. I've taken the targets off this because that's for our subscribers only. And you'll have a video prepared by Jordan Marshall every Friday. So head on over to our website. The link is in the description box below to have a look at our Eurodollar subscription. Let's have a look at the monthly chart from this low of supercycle wave 1 here. This down here. Now we're looking at a zigzag up. For cycle wave A, it subdivides really well as a 5, 3, 5, an impulse for primary A, a regular contracting triangle for B, and an impulse for C. If A is over here, then B should be underway. And if we're looking at a big flat correction for supercycle 2, B should retrace a minimum 90% the length of A. If this minimum 90% length is not met, then I would relabel this W, X, Y, and I'd be looking at supercycle 2 as a double zigzag. So that's entirely possible. So this is a minimum requirement for a flat, but it's not a minimum requirement for a zigzag. We need to see a 3-wave structure unfold to the downside. And if it meets this minimum, we could be looking at a flat. If it doesn't, we could be looking at a double zigzag. So for the next several months, if not a year or more, a couple of years possibly or more, we'll be looking at overall downward movement in a 5-3-5 structure, most likely to subdivide as a zigzag. Let's look at how it could be beginning from this high here on the weekly, this point here. So we've got a 5-wave impulse that looks fairly decent over here. I'm labeling that intermediate 1. Intermediate 2 could be an incomplete single zigzag, 5, 3, 5. Now you can't label this 1, 2, 3, 4, 5 because 137.248 is below 137.909, and you can't have 4 overlapping wave 1. So that gives us a little indication that this upward movement is most likely a corrective structure and not an impulse 1, 2, 3, 4, 5 unfolding higher. I have a short-term target for intermediate 2 to end where minor C would reach the 0.618 extension of minor A at 148.274, but it is also possible it could be over here. We could be developing a bearish candlestick pattern on the weekly chart. If Friday moves a bit lower and this is a bearish engulfing pattern, then I think I would label intermediate 2 over. But let's have a look at how minor C is subdividing on the daily chart. Here it is. So here's minor A, minor B, minor C with minute 1, 2, really nice looking impulse for minute 3. Little minute 4 could be unfolding today. It may not move into wave 1 price territory below 141.955. This wave count expects one more high to complete the structure of minor C. Now here's a really good way you can use Elliott wave rules and invalidation points to inform your decision making. If we see a new low below 141.955 before we see a new high, so in other words, if the expected structure doesn't complete as I expect, and this is invalidated for the very short term, that tells us that this upward movement should be over, because wave 4, if it continues, may not move into wave 1 price territory. So a new low below this point means wave 4 has to be over, and so the whole structure of intermediate 2 would very likely be over then. So that's our first indication we could have had a big trend change. The next indication would be a breach of this channel. I've drawn it from the start of A to the end of B with a parallel copy on the end of A. If we see a full daily candlestick below and not touching that trend channel of downward movement, a red candlestick, I would then have a lot of confidence that this upward trend is over and the next downward move would be underway. And for this wave count, the next downward move is expected to be a third wave at intermediate degree. Looking at technicals first, on the weekly chart, I can see a fairly decent looking tower top here. I can see a bullish engulfing candlestick pattern here, a bearish engulfing candlestick pattern here. Not yet. I can't calculate to see if this candlestick for the current week is a bearish pattern. It could be a dark cloud cover. So far it's got a rather bearish upper wick, but we need to have Friday close before we can make a judgment on this candlestick. So after Friday's closed, have a look at the weekly candlestick. If it's closed at least halfway or deeper than the body of the prior candlestick, then that's a dark cloud cover. If the close of this week is below the open of last week, then that would be a bearish engulfing candlestick pattern reversal pattern, which is stronger than a dark cloud cover. It's going to have push from volume, so watch how Friday closes to make your judgment. If we have a strong bearish candlestick pattern here this week, that could be the end of upward movement. It is looking like it's going to have push from volume, and we have seen some decline in volume in the last 3 or 4 upward weeks. So this upward movement, the end of a fifth wave, is really common to see a decline in volume, so that supports the Elliott wave count. The last signal given by on balance volume was bullish, but it was a very weak signal, and it may well have been resolved, or at least the result of that signal may have completed. So there's no new range and no new signal. ADX indicates there is an upward trend. It's a long way from extreme, but previously, within previous upward movement, this upward trend reached very extreme, above 60 on the weekly time frame and above both DX lines. So I consider ADX can sometimes move a little bit like MACD. So within the middle of the movement, you'll see the most extreme trend. At the end, the trend may not be very extreme, but if you look back and see, has it been really extreme for this piece of movement before? If the answer is yes, then you could be getting closer to the end, even though at the end it may not be very extreme. I hope that makes sense how I'm using ADX there. RSI is a neutral. Previously, there's double bearish divergence. Price hasn't made a new high yet, but if it does, and RSI exhibits further bearish divergence, then I would expect a trend change very, very soon. That would be very bearish. Money flow is neutral, no divergence. ATR showing some decline as price rises, so not only in volume but in range there's weakness. That supports the Elliott wave count, and stochastics overbought. On the daily, looking for some technicals, we have an evening doji star candlestick pattern at the last high, and now this current session looks quite bearish, so it's possible we could have that high and we might not get that very last high I'm expecting. Look out for next support 137.932 and resistance above if we do see another high 148.835. There was a little bit of a push in volume for the last upward movement, but overall volume is still declining as price moves higher. This still fits the Elliott wave count that sees a final fifth wave up completing. The last signal from on balance volume on the daily chart was bullish. There's no new range, so no new signal to take note of here. ADX at the daily chart levels indicating there's an upward trend. It's got a long way to go at this time frame before it's extreme. The last very extreme trend was an upward trend to the last high, and as prices moved lower and sideways, we've seen ADX decline. It's again indicating an upward trend. So again, this fits with a fifth wave for the Elliott wave count. RSI is in neutral, there's no bearish divergence. Money flow also neutral with no bearish divergence. Volatility declining at the daily time frame as well as price rises, so there is weakness in this upward movement. Again, this fits with the Elliott wave count, and stochastics neutral. So my bottom line for dollar yen is I'm expecting a very big trend change, either here or very, very soon with one final high. For risk management, a new low below 141.955 would add strong indication that a high is in place, and if we see this channel breached, then I would have reasonable confidence that a high is in place and a third wave down is underway. When we know where the second wave ends, then we can calculate where the third wave may end. I don't know where the third wave starts, so I can't calculate a potential target for it yet for you. Maybe in the next update for dollar yen. I hope this helps you make more informed decisions using some expert Elliott wave analysis, and if you're trading euro dollar, we have that on a daily basis at pureelliottwave.com. Click on the link below.